Welcome everyone to this wrap-up of our 29th annual energy conference here in Holmenkollen. We have had now 165 companies presenting, almost 2,000 participants, and a lot of meetings, one-to-one as well as talks in the hallways as well. Today has been a bit more about shipping. So Eirik, Haavaldsen, what are your thoughts on the day?
No, I think it's it follows a little bit what we saw yesterday, that this lack of investment, this aging infrastructure theme that was a lot talked about yesterday, that is also, as energy security obviously has become a big topic in 2022, shipping kind of adds to that. So the need to secure tonnage to be able to ship natural gas, ship oil cargoes, refined product cargoes, coal cargoes for that matter, is sort of changed a little bit the favor into ship owners' hands, I would say. So of course there's a lot of optimism. It feels like
it's better times than before.
Much better times than before, and I mean there was optimism last year as well when certain segments had improved. I think this year you've seen what can happen to shipping when the cargo values have gone up a lot. We've seen that in natural gas and oil, obviously, but even in dry bulk and coal cargoes are a lot more valuable. So when cargo values go up, when you then start to see that there might be a bottleneck in shipping supply, then rates will go very high. So if we had 26 shipping companies today and a couple yesterday, but today there's obviously been an overweight of tanker names, where I would say that the crude tanker owners are very encouraged by the recent trend in VLCC rates. The product tanker owners are almost, they are quite euphoric, but
because there it's already happened, right?
It's already happened, right? And you've already reached a level of super profits, but then you're looking 6 months ahead, 12 months ahead, and as the CEO of Hafnia said, even if we wanted to, we cannot really build this market to pieces. So of course, for them it's more a capital allocation question, and what are you going to do when you reduce your debt burdens so massively, so quickly, when the renewable alternative is not really an option. So what are you then going to do with your cash? And of course there's a great emphasis on shareholder returns.
And why would you say renewables is not an option? Is that because it's too expensive with steel and everything today, and it takes too long time to get it, so you don't really want to do it?
Exactly, it's those two things. That whenever you've had the beginning of an upcycle in shipping, since 2007 at least, over the past 15 years, whenever you are at the early innings of an upcycle, you've been able to go to the shipyard, you've been able to say to the shipyard, I want to order a vessel, basically at your marginal cost, and you've been able to get that vessel within 18 months. And now, if you go to the shipyard, they will say, I'm fine because I've gotten so many container ship orders last year, and I've gotten so many LNG carrier orders, and I expect to get a lot more LNG carrier orders. So I don't want to build your tanker. So I can charge you, I can quote you a tanker, but it's going to be delivery 3 years, 3.5 years down the road, and it's going to cost you 50% more than it has done on any given point in time for the past 15 years. And that's, I think, crucial, because shipping is a low barrier industry, barrier to entry industry, right? So you've been able to see speculative orders from inexperienced investors, inexperienced companies, when you see a sort of a tightening market. But that's not possible today, because you need to then take a bet on a much longer duration of the market strength, and you need to pay a lot more, which means that you need a higher rate over the life of the vessel. And that's, I think, creating an extremely interesting backdrop. And I'm quite convinced that 2 years down the road, on our numbers, we believe you need to invest $24 billion in VLCCs for the next 5 years, which is equal to what you've invested since 2015. But since 2015, the fleet has grown 22%. We believe you need to invest the same amount in vessels for the next 5 years, just to keep the fleet stable.
Just to stay flat, because of the old ships that has to come up.
Exactly. So I think that's the general theme. And then you have LNG owners, which are of course extremely happy with rates, but that's driven they acknowledge that it's driven by high natural gas prices, so it's very sensitive to that, because if you're a LNG cargo owner today, if you export cargoes out of the US Gulf and you're making $150–200 million on a voyage, you just need to have your vessel. So you don't care about utilization on that vessel. It can lay still for 340 days, but you just need it for
one
exactly.
And
so
that's back to the value of the cargo, right? That's just extreme at the moment.
Exactly. And then the LPG owners, which is more of a niche where valuations certainly are lower on the price to NAV basis than other shipping segments. The focus is a little bit on how LPG as a fuel, how propane as a fuel is actually on a relative basis quite cheap now versus oil versus natural gas, and that's creating opportunities. So I think we had perhaps some surprisingly positive presentations from the LPG names and the outlook for 2023, where there is an order book. They're quite optimistic.
But that's one of the few sectors that have a real discount to NAV at the moment, is it?
Exactly. But it's important to acknowledge in shipping, even though equities have rallied 150–200% year to date in some segments, so have NAVs. So cash flow, higher vessel prices, etc. The shares aren't really more expensive, even though they've doubled.
You're not paying more for earnings.
No,
that's the same.
And I guess that's a little bit the same as we've seen in energy. So, Tom Erik, we've had many told me yesterday that the conference this year feels like 2006 or 7. So complete euphoria. What's your take?
I think we are still early in a cycle, but I think that's maybe a bit what's causing that optimism in the industry. There is that you see it now, and you see a bit the same you mentioned with share prices coming up, but still it's you can buy European majors at 5 times earnings. That has never happened before, and of course it also puts or increases basically the potential of the upcycle, because it's who wants to buy or invest in a new project with first oil in 5 years if you can buy Shell or BP or Equinor and pay back all the capital in 5 years. So what happens is, of course, that you extend a bit the investments, you put that out in time, and you see that both the length and the upside potential increases. So I think a lot of people in the industry at least sees the narrative quite clear that oil demand is around all-time high again after recovering after the pandemic. But we are still investing less than we did before COVID, and that back then was also 40% lower than back in the old good days. So it is a cyclical market, and it's been more or less challenging or bad for 6 to 8 years now in oil and gas. Now it's turning. So a lot of positive companies there. And focus a bit on the same, investments are clearly coming up, but maybe not as fast as people expected. And that, of course, for the companies themselves is quite positive. For energy prices next 2 or 3 years, probably not. So it is potential for a squeeze here, we think, for some years now.
Energy, and any companies you find it worth highlighting this week?
I think it's many here, but I think the presentations of some of the North Sea players that has become very large, Aker BP, Vår Energi, that combined produces 600–700,000 barrels per day, so it's very, very sizable businesses. Their comments on kind of the robustness of the portfolio and what they are making now, and that they seem to have also cost under control and projects moving forward. So there will be record high activity in Norway now due to the temporary tax regime and good prices. So projects are moving forward, but on a global basis, still looks very, very promising for a super cycle in energy, basically. And I think here in Europe, we talked about that on different kind of podcasts related to the conference and things like that, but we have been so used to access to cheap energy, and we have allowed Russia increasing the dependence on that gas. Now that's disappeared, and where you produce it is actually starting to matter. And I guess it's in the energy market that when you get more vulnerable, it's a bit like on shipping, where actually transporting it and having the goods at the right place is much more difficult, and it's much more important than it was a year ago.
So I think energy security and we've taken it for granted, really. Energy security for the past, basically for the past decade or more. And now we're kind of facing the reality of that, which is it goes for the whole value chain, whether it's vessels transporting the energy, whether it's the producers, whether it's having enough equipment, enough modern equipment to do the work.
And that's I think is a key point actually, which is new this year. I would say, you know, already last year the producers were kind of doing quite well, but now you see on services as well. You know, we highlighted in the intro that you have, if you take Schlumberger and Baker and Halliburton, 3 companies alone have, you know, they are 140,000 employees less than what they used to be. So, you know, they have been downsizing and downsizing and downsizing. So that, of course, when you now increase activity again, then sets the stage for an upcycle also on the energy services, which has been, you know, even worse than a lot of the older. So that's a new, I would say, for this year, that they are back and much more comfortable on the situation there.
So it's always extremely dangerous in our industries to say that this time is different. It usually isn't. But I mean, at least one thing that is different is the lack of willingness, lack of intention to invest.
Immediately invest and grow, That's it's people are more cautious. And then I think also, at least in call it, if you look at the big picture and especially like the oil market that is cyclical, it's been more or less 8 bad years, and we have maybe had now half a good year or a year now that's been good. But I think when you build up kind of an undersupply in a period of 8 difficult years, and then it takes some years to resolve it as well. So so we remain quite positive here on the outlook. Yeah,
and I guess that's even though shipping cycles are a little bit shorter than energy, it's essentially the same picture, and it's how we, at the point in time where we really need to start replacing a lot of the equipment, the vessels built 20 years ago. Because keep in mind, you know, the period from 2002 up until 2008 was a real boom period in shipbuilding. I mean, so many vessels were built across the asset classes, and now we really have to start replacing those because they're reaching the age of 20. They're not going to be able to trade, particularly not in an environment where, you know, you have CII, you have EEXI, new regulations intending to reduce emissions in shipping. So you have to start replacing that at the point in time where shipyards are full and shipyards are confident, which is even worse than full. So that's creating, in our opinion, a very, at least not something we've seen since 2005, I would say.
Yeah, and I think also one positive thing from yesterday was Aker Horizon with Christian Røkke had a very exciting presentation with very high ambitions, and basically increased the already high ambitions from 2 years ago. And what is seeing on the renewable side as well now is a massive acceleration. Basically, I think, you know, the industry has been ready to scale. Investors has been ready to invest to do that for a couple of years or more already. But now also policymakers are moving things forward much faster. So you've seen some big packages on climate change in the US, especially, that they highlighted was very important. And here in Europe, we also expect that to help a lot, that the governments now, you know, now energy is back on top of the agenda, and then things moves much faster on the policy side. So you maybe don't have to wait 5 years to get the license to develop offshore wind like you used to do. So that's also something that's quite exciting for, call it, a bit more. It takes more time there, but a bit more in the future. That could add significant capacity as well.
Yeah. So I guess the key takeaway is there's a lot more optimism than we've seen in many years.
A bit dangerous, it feels like.
It feels very dangerous, but at the same time, it's not going to be a supply wave of new equipment or new investments that is going to kill this cycle in the near term, at least.
Yeah, I think that's going to be a conclusion. And on the energy side, we almost need more of everything. It feels like you need a bit more ships in almost every sector. You need a bit more oil and gas to transport as well. So I think that's maybe a good ending to this wrap-up of the conference.
Yes.
Thank you very much.